Rocket Lab recently joined the Nasdaq 100, and on the exact same day, SpaceX went public. And instead of rallying, the stock got hit for more than 10%. Most traders are looking at that move and assuming the thesis is broke. But I think they're looking at the wrong thing. Because the $800 billion of forced index buying that matters here hasn't fully worked through the system yet. So let's start with what actually happened here, guys. On June 11th, the Nasdaq announced that Rocket Lab would be added to the Nasdaq 100 effective Monday, June 22nd. That is normally a bullish event, and the reason is simple. Because every QQQ ETF, every passive Nasdaq fund, and every institutional product benchmarked to the Nasdaq 100, all of those have to own the stock. Not because they love the company, and not because they suddenly became bullish, but because the rules say they have to. Guys, we're talking about roughly 800 billion tied to index tracking products. That is mechanical demand, structural demand, and forced buying. And initially the market responded exactly how you'd expect. Then Friday happened. SpaceX debuted on the Nasdaq the same morning Rocket Lab officially entered the index. SpaceX opened with roughly a $2 trillion valuation. And suddenly, every investor looking for space exposure had a new shiny object. Rocket Lab opened around 118, and by the close, sitting around 102, down roughly 10%. On the same day, it joined one of the most prestigious indexes in the world. Most people saw weakness, but I saw a setup. So guys, this is what was interesting on this one. The stock story and the business story are moving in completely different directions right now. And that's where opportunities usually show up. Different types of divergences. People look at technical divergences on a chart, but you can also look at divergences with what's going on with the company and what's going on with the stock itself. So let's look at the business here first. Because Rocket Lab reported a Q1 2026 revenue of $200.3 million. That's growth of 63.5% year over year. A record quarter. Contract backlogs reaching $2.2 billion, up 108% from last year. And remember, backlog isn't projected revenue. Those are signed contracts, committed business. The company now has more than 70 missions in its manifest. Neutron development continues moving forward. And Neutron is important because that's the vehicle designed to compete directly with Falcon 9. In other words, Rocket Lab isn't trying to stay a niche player. It's trying to move up the value chain. And Wall Street's noticed. Clear Street recently raised its price target to $129 while maintaining a buy rating. But now let's compare that to what the stock is doing. After Friday's sell-off, Rocket Lab is trading roughly between 102 and 110. And just a few months ago, back in April, the stock was near $67. It rallied above 118 before the SpaceX-driven flush. And now it's pulled back directly into what looks like a prior breakout zone. A zone that may act as support. The weekly chart still maintains a higher low structure like we can see. We can see that. Let's pull that up right now so we can look at it. So like I said, we're pulling up the weekly chart of Rocket Lab and we can see we've got a low back here on April 25. And we got another low right here on November of 25. Then we put in another low April 6. Now it looks like we might be putting in another low, right? So the trend is still up and nothing about it's broken. But now let's talk about the options that we can do. Because implied volatility on Rocket Lab is still extremely elevated, which is expected. We just had a major index inclusion, and one of the largest IPOs in market history hit the tape on the same day. The more important detail, though, guys, is timing. Most traders think the index buying happens Monday morning, but that's not how rebalancing works. Funds need to be compliant before the open, which means the buying occurs before Monday. That means Friday's close. That means today. That means tomorrow. The mechanical bid isn't coming. It's already arriving. And if that demand does what it's supposed to do, a move from the 100 to 105 area back towards 115 to 120 over the next 2 to 4 weeks becomes entirely reasonable. Not because people suddenly fall in love with the stock, but because the mechanics support it. So now we know two things. The business remains strong, and the institutional buying thesis is still alive. But a good thesis doesn't automatically create a good trade. The structure here matters. And that's where most traders get it wrong. So let's look at the position here. If we pull up TastyTrade and look at the options chain of Rocket Lab, and let's just go out to July 17th here. We can see our IV is still at 54.4. That's pretty elevated. Anything over 30, I consider high. And now let's just look at the expected move and the one standard deviation. So the expected move is this orange bar. The one standard deviation on either side are these blue lines, and then another dashed blue line is the two standard deviation. So if I throw on, let's just put on a strangle. I like to look at the strangles here. I'm going to put on a strangle on Rocket Lab, and I'm going to go outside the standard deviation to an 8 delta. And because implied volatility is so high, we can put on a very low risk strangle all the way out. I mean, usually I can trade like a 16 delta, but a 16 delta, 17 delta is right at the expected move. I don't want to be at the expected move. I don't like to play it that close. I like to be outside the expected move and still collect premium. So I'm going to go 75 put, and the call side, man, we can still collect a decent amount of premium here. We can go all the way up to an 8 delta on the call side. 160, that seems a little light on premium. So let's just say 150. Right? And that's a 12 delta. So this is a very, very high probability trade on a $100 stock, and we're collecting $2.69 with 29 days to expiration. I will take this trade all day long. But before I put this trade on, I do want to go look at the chart and see if there's anything structural that catches my attention before we actually hit the button. So we're saying a 150.75 strangle July on Rocket Lab. So let's pull the chart back up and see if it still makes sense when we look at we'll probably look at the 4-hour chart. So here we go. We got Rocket Lab pulled back up, and I'm going to switch this to the 4-hour time frame. I'm going to clear the drawing set, and I'm going to show you how I set this up. So first off, I'm going to draw two price levels, one at 150, which is basically the all-time high. If I go out to the 3-week, we can see that's basically the tippy top, almost the wick, $1 below the all-time high. Okay, I'm going to go back to the 4-hour, and the put was 75 down here. So we have a massive range, and this doesn't even span earnings. Guys, earnings are somewhere August 6th. So if I go to the 3-week, I can actually see where earnings are. Earnings are on August 6th after market close. So this trade does not span earnings, which we won't get that, maybe a pop or a drop or something. That earnings event is outside of the strangle we're looking at. So if we look at here, in order for this to break our call to the upside, we would have to break out to a new high. And with SpaceX going public and these two companies, right, being in the same sector, right, space, I don't see that much capital funneling into Rocket Lab to push it to new all-time highs, especially with the FOMC meeting yesterday, where they came out with a little more hawkish stance. It just doesn't seem like new highs are in the picture. Almost to the point where it's like, I'd almost feel like you can kind of see this little mini peak breakout right here. I mean, we could probably even go 140 and feel pretty comfortable. To the downside, right, the put strike at 75. We've got, and I'll draw some Fibonacci lines, but it looks like there's some support here. We've got 3 wicks down that all bounced off this 100 level. So psychological 100 level of support, which corresponds to this swing high back on January of 26. So that's one nice thing. We got another swing high over here on April 22nd, and then we've got all this chop right in here that should give us some good support. So let's draw some Fibonacci lines. I also like to do that. We're going to start with this 37.57 low and go up to the 151 high. And you can see we're clustering right around this 38.2% Fibonacci retracement. Our 50% is at 93. Then we have a 618 at 80. So aside from structural support from the chart itself, from one swing low to swing high, we've got 3 Fibonacci zones that also will give us, some form of resistance if we were to break it to the downside. And let's try another set of Fibonacci. I used to follow the Fibonacci Queen, and I like to draw multiple lines. Go look at this, guys. So if we go from the next swing low, say this one here on March 30th to the swing high. Look at this. Look at this 50% and the 618 right around $93. They almost overlap. And when you get Fibonacci confluence, we call it, overlapping Fibonacci lines on different swings and different time frames, that also can serve as a major zone of either support or resistance. I'm going to go back out to the 3-week, and I'm going to draw one more from way over here and see if we get anything. So go all the way up to here. Not really much overlaps here. This 50% does kind of talk to this 618 right here. So that's another zone. And let me go all the way back to $3. Oh, look at that. Look at that. We went all the way to that $3 one. And this 38.2 retracement off of this 3 low to the 151 high. Look at this. We got a 38.2, a 38.2, a 50% all around this 93. So this $93 level, if you're looking at Fibonacci confluence, it looks like that's very important. And we would probably see, if we did break $100, we would probably see this 92 level right here. You can see them stacked up. All these zones, look at all these, boom, 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 right? We would see some pretty good support, coming down around this $92 to $94 level. So guys, I think the 151.75 looks like a great trade based on this, and I will probably actually put that thing on. This is not financial advice, but I'm probably going to put that trade on. So now we looked at a short-term trade setup, and we're going to hop back on to kind of the macro view of Rocket Lab, right? So here's, if you're an investor, if you're a holder, if you're selling covered calls, right? Here's what we want to see, and this is the bull case, that the rebalancing demand does its job. Rocket Lab stays above that $100 level. SpaceX driven selling, proves temporary, right? People are selling Rocket Lab to get into SpaceX. The market began separating Rocket Lab's fundamentals from the IPO excitement surrounding SpaceX. The stock grinds back towards 115 to 120 over the next 2 to 3 weeks. Base scenario, guys, is Rocket Lab spends the next several weeks trapped between 100 and 110. Right? The Nasdaq would create a floor, and the SpaceX would dominate the conversation still. Right? So that's why I don't see us breaking out to new highs. The real momentum never would really develop in this situation. And then the bear scenario is Rocket Lab closes below 100 and gets down to that $94 to $92 level that we saw, which is still fine because it's above our $75 strike. But if you're a holder, you want to watch this level, and maybe that's a buying opportunity. The fundamental story of Rocket Lab, though, remains intact, but the market starts repricing the entire space sector. SpaceX's $2 trillion valuation changes the competitive landscape here. Institutions that previously viewed Rocket Lab as the best public space exposure now have another option, SpaceX, and it's a very liquid one. The forced Nasdaq buying temporarily absorbs some of that rotation. But once the rebalance is finished and the mechanical bid disappears, continued selling pressure could push us back down to that 92-ish range where all those Fibonacci lines kind of came to that confluence, and it would be a nice zone of support and possibly a buying opportunity. Or maybe if you're trading that, that's where you look for a swing trade and a bounce off of that level. So guys, before entering the trade, there's 3 risks we need to understand, right? If we're selling premium, we want to look for that IV crush, and we could see an IV crush after the rebalance. So if we're selling options, that's great. If you're buying options, be careful on that June 22nd date and watch the IV. It's probably going to come down. So guys, by Monday, which is just in a couple of days, this catalyst will be largely behind us. I'm putting this trade on because IV is elevated due to the SpaceX IPO and due to the rebalancing event. Once the event passes, like I said, IV will begin to bleed out of the options chain. So guys, my name is Luke, and this is the OptionBomb. I hope you enjoyed this rundown on Rocket Lab from the fundamentals all the way to a real-time trade analysis on how to trade, inclusion into an index. And this, we focused on Rocket Lab, but this can be applied to any underlying if it's being added, and we'll get into being removed. We're going to talk about Zscaler. I'll probably do it today because Zscaler is getting removed from the index. So there's been some forced selling there, and how to play that with options. Because even if we miss this exact one, underlyings are always added and removed from indexes, and the same mechanics can be applied whenever that event happens. Again, this is Luke with the OptionBomb, and we'll see you in the next one.